Hey guys, in this video I will show you how I scalp the markets using a simple and easy setup strategy that helps me to spot high probability areas on a chart. So scalping is basically a technique which involves opening and closing trades in a very short period of time in order to obtain quick profits. This trading method is based on opening trades and closing them with small profits on lower time frames. My scalping setup is based on finding Confluence. A confluence is an area with multiple support and resistance levels, both static and dynamic. A confluence of support or resistance is more relevant to traders as it includes two or more important focus points on the chart. Although it might seem complicated, finding confluence on the chart is not difficult. You just have to train your eyes to spot chart areas where multiple levels meet. Finding confluence on your charts is very important for scalping because these areas offer high probability trading opportunities. Before you continue with the scalping setup, let me tell you something important. Finding confluence is quite subjective and is dependent on the trader's skill, experience and tools used on the chart. My personal rule is to find areas with at least two support and resistance levels. One of them must be a static level and the other one a dynamic level. So, we need three confluence conditions to be met for our scalping strategy. First, we need an obvious area of support or resistance. Support and resistance is practically the foundation of technical analysis, and these levels serve as a starting point for developing an idea of what may happen next in what concerns the price movement. So we first look at recent market swings and try to spot areas of static support or resistance. As a rule of thumb, if the line includes 3 or more swing points, it means that the support or resistance level is more relevant. But drawing horizontal lines around recent market swings can be very subjective, and in most cases we can usually only approximate those areas. That's why we need to add something else for our scalping confluence setup. The second confluence condition involves the 200 EMA as a dynamic area of support and resistance. I prefer to add the 200 EMA because, as a dynamic area of support and resistance level, is constantly changing depending on recent price action. In the case of a static support or resistance level, you already know at the beginning of the trading day where those levels are. You know in advance where the possible areas of interest are located on the chart. With dynamic support and resistance, you don't know an exact number as these levels are changing depending on market fluctuations. This is a good thing for our scalping setup because we can use both static and dynamic levels in our advantage. So we add the 200 EMA and start searching for areas of confluence between the dynamic support and resistance and the static support and resistance. Our third component in our scalping setup is the stochastic, used to pinpoint market entries. The stochastic oscillator will help us to spot divergences on the chart. If you are not familiar with divergences, a divergence occurs when the price forms a lower low while the stochastic forms a higher low, indicating a possible buy, or when prices form a higher high and the oscillator forms a lower high, indicating a possible sell. A divergence occurs when the price action is different from the action of the stochastic oscillator. When a divergence occurs, a potential change in price direction could be on the cards. So, now we have the full setup. We are looking for confluence of dynamic and static support and resistance levels, respectively recent market swings and 200 EMA, and we pull the trigger if we spot a divergence on the stochastic oscillator. Let's see this scalping strategy in action. In this chart, we see this level of static support and resistance. And here is the confluence area with the 200 EMA, the dynamic support and resistance indicator. So we have this potential area, but we cannot enter the market blindly. We need to confirm it with the stochastic. We have a regular divergence, and we also have a hidden divergence, which is a more powerful setup. All our conditions were met, so after the crossover of the stochastic lines, we can enter long on the market. Because we trade based on Confluence, the stop loss order would be placed below the Confluence area. The profit target depends on your trading style and risk aversion. You could aim for a 2-to-1 ratio, or put your stop to break even once in profit and ride a risk-free trade. Here's the same setup. We have a Confluence area between the recent market swings and the 200 EMA, and the divergence on a stochastic oscillator. If you incorporate also some price action techniques, the scalping setup will become even more powerful. Look at the flag pattern developed, which is another confirmation that the long position was the only alternative and short positions were out of the question. Here we have a short scalping trade. We have a clear resistance area right around here. The 200 EMA serves as a dynamic area of support and resistance. And around here we have our Confluence area. We have a hidden divergence on the stochastic, and once the stochastic lines crossed, we had the confirmation we needed, and the high probability trade was on the short side. I know that there are some of you who are also trading on crypto markets. I personally don't trade cryptocurrencies because I prefer to understand the fundamentals behind the market before I decide to put my money on it. So I've not tested this scalping strategy on crypto markets, but you can backtest it on a demo account to see if it has potential. On this Bitcoin chart, I found the Confluence pattern and the stochastic entry here, but I am not familiar with the spreads on crypto markets, so I cannot tell for sure if you can profit from it in the long run. Why I am talking about the spreads? Because of the nature of the scalping, you need to trade only the instruments with the lowest spreads. As a scalper, by default, you'll use lower stop losses, aiming for small profits. The higher the spread, the lower your stop loss will become. I personally never scalp an instrument that has a spread higher than 2 points, because the risk-reward ratio is not worth it. Like I said before, scalping may seem easy, but it's not. If you want to make money from scalping, it's imperative to have a disciplined approach to trading. Keep your price charts clean without plotting a lot of indicators, and focus also on reading and understanding the price in order to increase your chances to scalp the right way. If you got any value from this, please consider subscribing to our channel, share and like this video, as it will help us a lot in the future. Until next time.